If you want to make some money in a understandable, consistent way, you have Bitcoin. It goes up around 150% a year, even taking into account the bear markets over time. Right? That is the best performing asset you've ever had in your portfolio. So you should be delighted.
Okay. So what's going to happen to Solana?
Solana will outperform all cycle. And it's as simple as that. Why has Solana been a better performing asset over time than ETH or Bitcoin? It's because it's newer. When networks are new, if it goes from 2 people to 4 people on the network, that's a doubling of the network with only 2 people.
Right.
When you go from 50 million and add 2 people.
Real Visions, the founder and CEO, Pal, is a visionary whose thoughts have been widely recognized as expertise in the industry. As we continue to explore the details of the 2024 and 2025 bull markets, Raoul Pal's prediction becomes increasingly clear. Pal foresees an amazing future using a special combination of macroeconomic and cryptographic analysis. He anticipates a significant spike in the price of cryptocurrency assets due to the convergence of optimistic elements. According to his audacious projections, Bitcoin stands out as the top performer, maybe rising to over $200,000 per coin by May and possibly hitting $1 million per coin before the bull market ends. Pal, however, is not limited to his excitement over Bitcoin. He also has bold expectations for Ethereum, Solana, and other intriguing Layer 1 tokens. He sees Ethereum reaching a high price of $1,000 or more, illustrating the enormous potential rewards. Pal just had a fascinating interview with Ethan, which was recorded by none other than Anthony Scaramucci, the well-known founder of Skybridge Capital. In this conversation, Pal discusses the cryptocurrency bull market, the upcoming halving of Bitcoin, and lesser-known Layer 1 tokens that might provide smart investors with significant profits. Come along as we delve into Raoul Pal's thoughts and see how he navigates the shifting waters of the macro and cryptocurrency worlds with unmatched insight and proficiency.
We are in the crypto macro spring to summer transition. That is when liquidity starts coming into the system. It happens to correspond with the US election cycle, because obviously politicians can't help but give out candy around election time.
Yes, of course.
It's also the Bitcoin halving time. So Bitcoin halving reduces the supply, and then there was the ETF. So basically we've got a perfect setup of liquidity plus new demand plus reduced supply. And so the rest of the year should play out the same way. I mean, I continue to be very bullish this year and very bullish for most of next year. Because Bitcoin is basically a share of a network, the more people who join the network, the more value goes up. So as the ETF brings people in, as people start fearing the governments and their deficits, they start looking for different solutions. One of the reasons gold has been rallying is the same. So what we're seeing is this was the most successful launch of any ETF in all history, which tells you it's not just an ETF. It's that the idea of Bitcoin itself is resonating with people. They kind of know they're getting screwed somewhere by the system, and this feels like a way of getting higher returns with more volatility, but it kind of saves them from what is going on. So let's assume that this is the largest ETF launch in history, and a lot of newbies have come in. Well, it's happening at a magic time. The magic time is what's known as the Bitcoin halving. So new Bitcoin comes onto the market via miners, Bitcoin miners, who undergo huge kind of mathematical calculations to produce a Bitcoin. There is a fixed number of Bitcoins that can be produced each year. So it's a competition to produce them. So you need a lot of computing power. And then every 4 years, the algorithm of Bitcoin itself halves the number. So if there were 100 Bitcoin being produced by miners every day, whatever the number is, right now, after April 20th, it goes to 50. So there's more people coming into the market, which is new demand, and new supply is shrinking. So all the time, the only supply is really sellers of Bitcoin who hold Bitcoin right now. But Bitcoin's one of these weird assets where 80% of all holders just hoard it. Like you and I, we just don't do anything with it, we just hold it. And so there's really only 20% that's available for trading. That mechanism is driving the valuation up of Bitcoin over time. Now, it also means that people start to see this asset going up because there's less supply and lots of demand, and it joins more and more people. Because this asset is the best performing asset in all recorded human history. Bitcoin itself has done 20 million% since 2012. It has produced 150% annualized returns since 2012. Ethereum has done, which is another cryptocurrency, about 170%, and Solana 190% or 200%. So this asset is by far and away the greatest performing asset in all of humanity. And that gets people's attention, obviously, when people's returns have been low and people can't get out of the wealth trap.
Powell claims that fiat currencies were doomed because of the U.S. Federal Reserve's and other central banks' responses to the 2008 financial crisis. Although they may have momentarily prevented a catastrophe, their careless money printing to support the banking and real estate sectors just delayed the inevitable. Powell thinks that the ultimate disaster is getting closer and closer. Usually, during periods of uncertainty, investors gravitate towards safe haven assets such as Bitcoin and gold. In addition to sharing this knowledge, Powell, a former executive at Goldman Sachs, talked about promising Layer 1 coins that he is personally investing in a recent interview. In addition, he provided advice on how to divide funds between well-known cryptocurrency assets and risky ventures known as degen bags. But that's not all. Let's hear what Raoul Pal has to say next.
Think of a blockchain, a layer 1 blockchain, like the Bitcoin is a blockchain, but it's not used for much yet. They're building applications on it now. There's other ones like Ethereum is basically another layer to the internet that allows the transfer and storage of value, whether it's digital assets or even real world assets. You can have contracts on chain, stuff like this. So that kind of sits on top of the internet. And there's a few variations of this. One is the Ethereum virtual machine, which is Ethereum. The cryptocurrency, Ethereum, is your share and your payment system to use that network. Right, it's just like a mobile phone network. You might use T-Mobile. Okay, great. And you pay your bills to T-Mobile. If you want to use Ethereum's network, you pay using Ethereum, which is their native token. Okay, pretty straightforward. But there's a couple of competing ones that are big. The main competing one is Solana. So Solana is a faster, cheaper blockchain, maybe less decentralized, but certainly less deep and broad in the number of developers working on it, number of applications, but it's rising up fast. So that is another system. So you might find another 5G provider that's not T-Mobile, and you might want to use them instead. And maybe they've got different benefits. Then on top of that, there's another type of blockchain that's coming up in the background, which is the Move protocol, which came out of Facebook, DM. And there's a blockchain like Sui, which is another very fast, very cheap, but very innovative blockchains. So they all kind of allow different mechanisms what to use. They're like different computer systems, where some have different benefits over others. So there's about 4 or 5 of these that are gaining traction. Sui's earlier stage, so that might be put with some of the other early ones out there. But Solana and Ethereum are the kind of big daddies of this space that have been growing. There's lots of activity and being used.
Okay. So what's going to happen to Solana?
Solana will outperform all cycle. And it's as simple as that. Why has Solana been a better performing asset over time than ETH or Bitcoin? It's because it's newer. When networks are new, if it goes from 2 people to 4 people on the network, that's a doubling of the network with only 2 people. When you go from 50 million and add 2 people, it's not as much, it's no growth, right?
Right.
So early stage networks, when they start getting adoption, go up a lot in price. Because don't forget, your token price goes up the more people use the network. It's as simple as that. So it's earlier stage, and so it's likely to go up if it follows the same kind of paths of adoption that Bitcoin and Ethereum got as well. So it's been outperforming all cycle, and it should continue to outperform this cycle. There'll be other better performing ones because they'll be even earlier stage.
Right.
But of a big, safer bet, where you feel comfortable with your money, where nothing's going to go horribly wrong apart from the price goes up and down, is going to be Solana. If you want to make some money in a understandable, consistent way, you have Bitcoin. It goes up around 150% a year, even taking into account the bear markets over time. Right? That is the best performing asset you've ever had in your portfolio. So you should be delighted. Meme coins and dog coins, all of this stuff is use cases of cryptocurrencies on Ethereum or Solana or wherever. And that is just culture. That's the fun of the internet playing out. And it's a wild, speculative, gambling place. That is not the place for your capital. But we all enjoy having fun too. So as long as at least 90% of your assets are in something like Bitcoin, Ethereum or Solana, feel free to play around with the other stuff, get involved in the culture, but don't expect to make money, because you won't. That's the land of everything sounds like it's going to go up 100x, and some do, but most things go to zero. I mean, it's bizarre, however, Dogecoin has managed to last the test of time. Dogecoin is up 40,000% since inception and has outperformed Bitcoin, and it looks like it's going to outperform Ethereum. I don't understand it, but that is the culture of the internet in a token.
Raoul Pal clarifies the complex mechanisms and wide range of uses of blockchain technology in this insightful talk. He starts by explaining what he means by a layer 1 blockchain, using Bitcoin as an example. He characterizes this layer as a base with a lot of possibilities for applications. Pal then switches to Ethereum, describing it as an extra internet layer that makes it easier to move and store value through digital or physical assets. He describes how Ethereum's architecture makes it possible to carry out smart contracts, establishing the platform as a key element of the larger blockchain network. As the discussion goes on, Pal presents Solana, an emerging Ethereum competitor. He characterizes Solana as a possibly less decentralized blockchain that is quicker and more affordable. Pal compares and contrasts several blockchains with telecoms networks to show how they function as separate service providers, each with their own advantages and restrictions. Pal takes the conversation a step further by discussing up-and-coming blockchain protocols like Sui UI and the Move protocol, highlighting their novel features and their influence on the industry as a whole. Pal makes a noteworthy forecast, stating that Solana will do better in this cycle than other assets because of its early-stage development trajectory. He emphasizes the relationship between asset performance and network adoption, pointing out that Solana's relative novelty is a major contributing reason to its promising future. Pal offers some helpful advice on investing at the end, recommending a well-rounded portfolio that includes both risky investments and well-known assets like Ethereum and Bitcoin. He issues a warning against giving in to the draw of speculative investing and highlights the significance of sensible asset allocation in navigating the unpredictable Bitcoin market. Pal's observations provide an all-encompassing overview of the developing blockchain ecosystem, covering its technical nuances as well as its investment ramifications. Pal's knowledge acts as a guiding light for investors as they navigate the complexity of this emerging area, shedding light on the best methods to make educated decisions and create lasting wealth in the digital era.